Sorry, can you start all over?
Oh, geez.
Okay, rewind, we just called the meeting to order on mute. At 7:01, there's 4 of us here present and 2 absent, Aaron McGarry and Rob Mann. The second item on the agenda is the audit report.
Hi, Chris. Welcome to the meeting. The floor is yours.
All right, can you give us or give me sharing rights so I can throw?
All set.
Okay. All right. You can see that, right?
Yes.
Yes.
Okay, I'm here, Marshall's here. So hopefully if you have questions, we'll be able to answer them. You may have seen our summarized presentation before. We try to put the best of everything we have in here, try to give you the highlights, maybe answer some questions before you even ask them. So I'll get started. So we're looking at the audit from June 30, 2022, so July 21 to 22. It has several components to it. The core financial audit starts with a management discussion and analysis, which is a high-level summary. Has some bullet points on economic factors and results of operations, more a narrative type approach than a financial statement type approach. Then we have the core financial statement audit, all funds of the town, all debt, all fixed assets. This is where the bulk of our work is done. We also have separate smaller audit packages, a state grant compliance audit, and then a federal grant compliance audit. They each have their own reports and schedules, although they are very similar to each other, just one focusing on money that starts at the federal government, and the other one is money that starts from the state budget. Even though a lot of the federal money comes through the state to get to you, we distinguish between what the source is. And then finally, there's another component that a lot of people don't see unless you're in the on the education side. The State Department of Education has a list of testing procedures that we do. The Board of Education has to upload financial and demographic data onto the state system, the EFS system, and the state specifies tests that we do to test the integrity of that data that's being uploaded. So it gets uploaded, we do the audit, the regular audit, then we compare what we found in the audit to what's uploaded, and then adjustments are often necessary. I think the status of yours right now is Bill's got the changes from the audit and he has to input it into the system and then it can be finalized.
Yep, that's correct. That's one of the items that I've been letting push out a bit so that we could attend to the budget and get through some other deliverables. But we do have the work's been done from King and King, and if I remember correctly, there were a handful of adjustments, and I believe both of them. And Marshall, you may remember too. I believe most of them came out of the audit because the original upload of the data was prior to the audit. So anything that gets flushed out during the audit becomes an adjustment afterwards.
Yep, exactly. Yep. So those are the major sections. Here are highlights. There are 3 different types of sets of financial statements in your core financial audit: the government-wide statements, the fund basis statements, and then the budget basis statements. So you can kind of pick up on that wording as we go through. In your core financial audit, pages 12 and 13 are these government-wide statements, and what they do is they really cram all the funds of the town into one column. They also bring on depreciable fixed assets, so it's got depreciation just like a for-profit entity would have, or a non-profit entity, but you don't normally keep depreciation as part of your budgeting process, but these statements do. They also pull in your long-term debt as liabilities right onto the balance sheet. So the numbers in the government-wide statements are much bigger than what you see in your fund basis statements. The fund basis statements start on page 14. There's a balance sheet and a revenue or profit and loss, revenues and expenses, shows the changes by fund. The general fund is always separately presented. And then we also show separately what are called major funds. And the major funds are strictly, as they sound, it's a mathematical calculation of what is a significant fund. So for Thompson, in addition to the general fund, you have the capital projects fund, is separately stated. The Turtle Lot Trust Fund is also separately stated, and that's because of the assets, the invested assets in that fund. And then your grants fund, where a lot of grant projects are going through. Right now, it's got the ARPA money in it. So that's certainly going to be a major fund while ARPA is being received and dispersed. And then every other fund in the town that doesn't qualify as a major fund gets collapsed into its own column, which is called non-major fund. The capital projects fund did go down significantly, and that's what will happen in a capital projects fund. When you bond the money, you might have a big increase in the fund balance, because on a fund basis, debt is revenue. And then when you spend that money on the school roof, for example, the fund balance goes down drastically. So that capital projects fund swings back and forth pretty aggressively, depending on what projects are being either funded or in progress and being spent down. I skipped the general fund balance, which is the major fund. Your fund balance is $1.6 million. There are various little pockets of money. Most of it is unassigned and available. There's a few benchmarks that you can use when people say, "Gee, how are we doing?" One of them is this GFOA recommends that that you have 2 months of your budgeted revenues kept in your fund balance. So that's 16.67% of your budgeted revenues is their benchmark for suggested fund balance. Yours is lower than that. You're at 5.8%. So there's a couple other benchmarks. They're all in the 10, 12, 15, 16% of budgeted amount range. So you are below that. And the next item there, page 16, that bullet mentions you did have a decrease this year of 171,000. Not as big as the capital projects fund, which I already described. After page 16, there are a lot of note disclosures. There are also some pension funds financial statements. We're going to get back to those. Just the order we did it skips over that for now. Pages 58 to 63. This is really that third set of statements I was talking about, the budget basis statements. So that's in detail. That's pretty much equivalent to what you would look at from your finance office on a budget basis. What do we budget? What are we spending? And what are the variances? So those pages are most comparable to what you see internally and focus on. We also, kind of going backwards, back up to the front, you have a pension fund for an internal retirement plan that you've had historically. It covers non-certified people at the Board of Ed. It's actually somewhat of a relatively small plan, even though it has $7 million in assets. Because of the timing at June 30, 22, the market was way down. So everybody or every municipal plan I've looked at for June 30, 22, they had a negative investment return for the year. So this particular plan was actually overfunded in 21. You had assets in the investment account equal to that actuarially calculated future liability. The actuary said, "Oh, you've got enough in the bank." But of course, that assumes that we're going to continue to get 22% a year returns. After this negative year that you had in 22, I think you're down to about 93 or 95% funded. And it is in the audit. There's a lot of schedules on that. Even at 93, 95%, that's actually well above the norm. I think the national average is about 75% funded. And generally, they're never funded because there's always people continuing to earn benefits, and they're not those benefits are not going to be paid for often many years. So mid 70s, upper 70s even is probably where the most of the better funded plans are. So even though you're not 100% funded, you're still definitely above the curve or ahead of the curve. This is a 3-year trend on your fund balance. I mentioned your fund balance went down this year. It has not swung too much over the past 3 years, between 1.5 and 2 million. So you've been below those benchmarks that I described earlier. These are references to various note disclosures. So behind the financial statements are notes, and the notes provide explanation and detail on what's in the financials. Your long-term liabilities, they consist of bonds, loans. They also consist of your retirement benefits. So you paid down about $900,000 in the GO bonds. The clean water funds, you say, oh, we only paid down 24,000. Those clean water funds are low interest, long-term loans. They're often 40-year terms on those. Let's see what you have. You have, you'd be paying about the total cost on those is $33,000 a year, and it goes out to 2037. So they're just slow going. We do show what you have for future pay downs. The clean water funds, $33,000 a year. Your bonds, as they are now, are about 1.2 million per year, and you have them currently scheduled out through 2057. After about 2030, your annual debt service drops off quite a bit. So you have, for retirement plans, you have the Board of Ed non-certified, which is a plan you run internally or in-house. You also have people participating in the state, the MERS plan. And so that's obviously a much bigger pool. There are many towns and other districts that are participants in that. If you look at the schedules for the MERS plan that are included in the audit, they actually had a favorable return. And I think that's just because their actuarial results are stretched out over more periods. So they stretch it out so long that you're still enjoying, or they're still enjoying, positive returns, and the negative return from last year hasn't quite kicked in yet. So MERS actually had a good year, contrary to the market, at least actuarially speaking, it did. Then the other plans you have, your certified teachers are in the state plan. The state plan, you are not responsible for any of that. At least you have not been historically, but just for reference, for just the town of Thompson's teachers, the state kicked in 2.2 million for their retirement plan. And then there's a retiree health insurance subsidy. It's a pretty modest subsidy plan that they have. State put in about 53,500 for the Thompson teachers last year. We have a schedule after the notes, and we have more detailed schedules. There's one that's called the schedule of the tax collector, the tax collector's report, and it shows the levy, it shows outstanding taxes at year end, it shows how much was collected. You're at 4.6. We do a measurement, and I put this in all of our presentations, but particularly for Thompson, it kind of illustrates how some of the analysis we do of numbers leads us somewhere. You have about 4.6 of the current levy is outstanding, which is fine. It actually went down over the prior year. I think you had a big collection of some late taxes. We generally look at a range of 3 to 8% as being normal. So you are in that range. But going back to our analysis of numbers, we noticed that you did have, while you didn't have a large number of receivables, they go back a number of years. And so we looked into that, and you do have a significant delinquent account, a one property that is significant, and it goes back through all the years that are still collectible. So when we looked into that, our understanding is that the town is in discussion with that property in particular. So it's not something that's sitting being unaddressed. It's currently, or at least our last conversation, it was in negotiations. So then we have our compliance audits. Again, the two audits look very similar, but one is state and one is federal. There's a schedule that lists the state assistance that you expended. This is the focus of this is grants expended, not grants received. So sometimes you may receive it or get awarded in 1 year, and you won't see that on the schedule. You'll see it when you actually expend it. For example, ARPA. You don't really see much ARPA money in the 21-22 audits, but you will now as you spend them. So of your $8.8 million of state money, state sourced money, pretty much 8 million of it was for the school for ECS and their excess cost grant for that's a special ed excess cost reimbursement. Each of these compliance audits has a schedule of findings. There's several categories of findings you could have. We did report 2 findings this year. One of them was what's called a material weakness, which could be significant. And it was related to accruals of expenses. You have regular, what you call accounts payable. You also have encumbrances and encumbered amounts. And sometimes you might encumber an amount at the end of the year, and then it doesn't get expended right away, and it carries over, and it really gets stale. So what happened, there were several things that happened, but this past year, Bill addressed some, let's call them stale items in reconciliations, or some stale balances in the balance sheet. We really addressed them and wanted to take care of them and correct them in this year. So that's what's called a prior period adjustment. And according to the audit standards, because it's from a prior year, I should say. And because the audit standards say when you have a prior period adjustment, it's defined as a material weakness, because how did you get there? You should have addressed these in a prior year when they happened. So that's that comment. So while it is a significant comment, it seems to be that it's because of extra effort being put in to address some stale items, and it should not be a recurring item. It should be a 1-year thing. Marshall, do you want to jump in and maybe add some explanation to that?
Can you hear me?
Yep.
Yes.
Yeah, so it just was related, I guess, mainly between some BOE payroll related accruals, some discovery of items within bank reconciliations, like you're saying was stale, or possibly a duplicate, or some items like that. I know it was a lot of effort with Guy and Bill working together to get kind of through all that, with also updating some procedures and stuff related to bank recs, and getting those kind of to a better procedure and control, just so that they're being done more timely and everything like that. Because I know that was kind of, we had some comments, either verbal or in management letters in the past, of bank recs having some issues, but and this was one of the BOE accruals were kind of an item we kept asking to address, but it kind of seemed it wasn't. But I know that was majority of this being squared away with this prior period adjustment.
Yeah, so that's kind of the result of some extra effort that was put in. So it seems kind of ironic, but there were some items that were sitting there, and like Marshall said, they dug in and addressed them and found that adjustments were necessary, and that's kind of where we ended up.
Chris,
The other
Chris, if I could, sorry to interrupt. Order of magnitude, what was the value there? terms of those prior period adjustments?
It was about 190,000.
And where do those funds sit now if they become unencumbered?
It was actually, fund balance went down, if I remember correctly. They
At the
drained,
beginning, yeah. And I think that has to do with the payroll accrual. Is that right?
right, that was the biggest driver, yes.
So while there were some funds unencumbered, there were also some funds that should have been encumbered or accrued. So
Right.
there were adjustments going both ways, and the net was 189,000. So what it did is, the reason you want to do a prior period adjustment is often you don't want that to affect the current year's results. You know, you could flush it through this year, but then it would have shown another $189,000
Right.
deficit or expense this year, and it didn't really pertain to this year.
Yeah.
So that's why the decision was, let's adjust it as of day one, because it really was for things that should have been adjusted at the end of the previous year.
So if the net was 190, what were the totals?
Jeez. I would have, honestly, I'd have to go back and look.
Are we talking hundreds of thousands or millions?
Hundreds of thousands, not
Yeah,
millions,
just,
no.
If I might ask on the same subject, isn't this something that would have been detected in earlier audits? I'm not sure how far back you found these issues, but
yeah, so they were being addressed with management comments, asking the BOE and down to reconcile their basically differences that they were having, because Orla was doing the reconciliations for the BOE, the town was, or the BOE was reporting the amount for payroll. And they did notice differences. They weren't as overall significant at the time of prior years. But obviously this also included other items outside the BOE accruals, with some other items. I think some just outstanding maybe checks and stuff like that that were addressed as well. Like I said, they were addressed in management letters. I do believe in 2020 there it was in the management letter, and maybe 21 we either had it sitting as a verbal or still as the bank reconciliation issue in the letter. This is just being kind of overall, because of the big change of prior period adjustment actually being actions taken on it, is why it's been elevated to this material weakness versus just being in a letter to management.
Yeah, so we did see the area as potentially being a problem. We raised it, we reported it.
Yeah.
This is finally, that's why I say it's a result of extra effort. This is now it being addressed and shaking out, and this is why I don't think you'll have this repeated next year.
Two things, Chris, if I may. Bill, could you send us just the two adjustments? And I get the net's 190. I'd like to get a feel for how much was there. And then secondly, if we didn't have these encumbered dollars. Well, explain, maybe before I ask that, can you explain the need for the accrual side? You basically took these encumbered dollars, you moved them over to an accrual with a net of 190. Why was that there? What was that about that wasn't taken care of in terms of the payroll accrual?
So it's really like reporting differences, timing differences of the payroll at year end. I think the amount that was being recorded in prior years might not have been the exact amounts, or once they were actually finally paid up timing wise, there was differences in different amounts that just were being left on the books and kind of carried forward in the books and in the reconciliations. So they kind of just built up over time, causing this adjustment on top of, there was other items not specifically related to the BOE accrue, but that was the majority of the adjustment.
How many years are we talking about cleanup, Marshall? Say carried over time. Is this 3 years or 13?
To be honest, when we took it over, this issue was already presented to us. So it's been at least a couple of years that we had it, and then it could have gone even farther back. That we didn't dive into. We just dive into saying there's an issue. We reported to you guys to say please fix it, and then it was not really being addressed, so we just kept it as a management letter or a verbal comment, because it came with also needing like sign offs and reviews from either Orla, if Paul was doing the bank recs. So it was kind of a combination of please review your bank recs with those outstanding issues, because we deal with scope of risks. So if the amount isn't too significant and we don't feel there's a large risk in that number, we're not going to escalate it to significant deficiency or anything like that. And there was a difference, but it wasn't significant enough to say, this is going to be that, material weakness at the time. But after it being fully jumped into and everything like that, they found some other adjustments. I think it was not specifically just in the bank recs. I think it was just the actual overall accruals for that timing difference was, not perfect, or being left on the books after they were being actually paid for.
I think that if we give you, it probably might be better explained if you saw the adjustments individually. Like you asked, I think that might be a better description, because then you can see it, say, here's a number, here's what happened.
Okay, and then
Right.
taking a little bit of time on this, but it's important. I think I heard that we kind of took all of our lumps in one year. It's kind of cleaned up now. We addressed it, right?
Yeah.
Do we have the proper governance and controls in place so that we're not here in future years having the same issue? Like, is there a safeguard now, check and balance or governance in place so that it doesn't reoccur?
I can speak to that a little bit, Chris and Marshall. So part of the work that went into arriving here was a more rigorous process around bank reconciliations. I'm pleased to report right now that we're caught up through May. That's actually part of the work that Guy does on because you always want to have a certain level of segregation of duties around different functions, bank reconciliations being one of them. And it's tough to do with the staff of two, me and Paula on the town side, or even three up at the school. So that's one of the elements that Guy brings as being, that additional body, and he can focus on this. So we are actually caught up this year. And we're catching, that's why you do a bank rec, to catch problems like this. So that's in place, and it's great that we're actually current through May at this point and working on a couple of issues. So yes, and I'm reviewing those reconciliations. It's nice that we can have Guy performing them and me reviewing them.
So for the common, person that's not Bill in terms of accounting,
Yeah,
if I re-describe this, reconciliations were not zeroing out necessarily. And rather than finding that correction in that given month or period, we were making some journal entry somewhere else to kind of
yeah.
get it to zero out.
Or it was even just sort of being carried and
We'll
unresolved.
just carry forward.
And this cumulative effect is our best effort at fixing that net impact over a series of years.
Thank you, Amy.
So this is Amy St. Ange, for Selectmen, Chris and Marshall. I just want to iterate that if I'm recalling correctly, all this occurred prior to the two former finance directors departing and us hiring Bill, but we had conversation with King and King, with the two finance directors, Melinda, myself, Kathleen Herbert, trying to come to there was just some clear issues and I think it was about the fall of 2021, prior to Orla's departure, we were trying to come to some solutions because they were just butting heads as far as reconciliations, etc. So is that, I'm remembering it correctly? I know Melinda's shaking her head, yes.
Yeah.
But I recall meeting together and trying to come to some type of solution to correct these issues back then.
More than once, too.
Right, yes, yes.
Yes. Yeah.
Melinda
So
said more than once, so.
the management letter I pulled up from last year, the conditions were that we were not seeing proof of individual reviews of the complete bank reconciliations. And it actually describes there is a discrepancy between the town and the Board of Ed financial records regarding the Board of Education reconciled bank balances. So this was an issue that we did report to management to be addressed with this. And yes, we did have meetings individually with Amy in the BOE and everything like that, stating that, you know, maybe a part of the conditions might be solved by moving the bank reconciliation over to the Board of Ed so that they can resolve their own internal possible issues that they're having with payroll, instead of when it was Bob reporting to Orla, you know, here's our numbers, and Orla trying to solve, you know, for X. So now, you know, with Bill kind of having reins on both sides, there really isn't any possible chance for differences that were being reported, and it kind of will be cleared up in that sense, but also the individual review, you know, separation of duties, like Bill said, definitely at this time has been addressed with Guy, with Paula, but that's actually one of our comments that on one of the next slides that we're going to say is basically keeping with, you know, with Guy assisting as consulting right now, you're kind of at like the bare minimum of what we would recommend for staffing for the finance office. So we'll kind of talk a little bit more on that on the when we get to the next slide for that.
Thank you. Excuse me.
Sure.
I have a
Dave has a
question, Chris. Dave Johnson, member of finance. I served 18 years on the Board of Finance, took 8 or so years off, and now this is my second year back. And I'm looking at page 61 and 62, well, actually 60, 61 and 62. And public safety and Board of Education. We're looking at significant deficits here in expenditures.
Yep.
It was my understanding that, according to Connecticut statutes, that any appropriation must be approved by either the town and the Board of Finance, depending on the policies that exist. But, you know, I'm not accustomed to seeing deficits of this sort.
Yeah.
Yeah. That's our second finding. Is literally exactly what you said, that our finding is that you had a budgetary violation related to public safety and education. So we agree. And have
No,
reported it as non-compliance.
so you're referring to Connecticut statute section 7(3)48,
Yes.
which means that any increase in appropriation must receive the approval of the Board of Finance and or Finance and Community, a taxpayer town meeting,
Yeah. So
in order to go forward.
yeah, I believe the statute is 20,000, but you guys also have an ordinance in place, I think for like 0.5% difference in department. But either way, it went beyond either the ordinance or the state statute, and is why we are reporting a compliance violation with budgeting. So yeah, it is abnormal to have those deficits, and we have reported on them.
Thank you very much.
Okay, so you covered our next item there. In the federal report, those two findings are also reported identically. There were no findings specific to state or federal grant funding. They were both more general financial or general compliance in the case of the budget issue. So the two reports have identical findings. The difference is the federal single audit reports only on federal sourced money, get 2.5 million. Vast majority of that was for education, which is normal. Over 1 million of that money was COVID. And if you look at that page 6 and page 7, it's identified. You can see COVID-19 funds for, well, there's the coronavirus relief fund, there's the ESSER funding, et cetera. So what we're seeing in our towns is for 22, there's a lot of this educational COVID money. It'll continue into 23, probably at a lesser level. And then in 23, we're expecting to see a lot more ARPA money being dispersed. So the federal mix will still be COVID related, but it'll be switching from education to the town side.
I have a comment on the public safety side. I don't know whether it makes it any better because it's still a huge deficit, but it was a deficit that was brought to this board. It was a deficit that was well known.
I'm not
So,
arguing that.
as
point.
was this
What,
school.
it wasn't approved by this board and it was an amount over above the 5.5%, which should have been approved by town meeting.
Kind of our fault for not moving this forward.
Yeah, I was.
I'm sorry, okay.
No, you're right. In other words, that's not something that's now.
Right, right.
No.
We should have moved it forward to the town meeting or the appropriate level of approval,
Mhm.
but that's on us, I think. But it wasn't a secret.
No, I agree.
All right, I'm not saying you are. Dave.
It's just a matter of procedure and state law.
So outside of the body of those reports, you could also have a management letter, which we did have last year. You don't have them this year. Sometimes findings or related findings move back and forth depending on their severity. When they're in the body of the reports like they are now, the town has to prepare a corrective action plan and submit it to OPM. OPM follows these up. If you are a repeat offender on the same thing and there's no movement happening, they will contact you and say, "What, why aren't you addressing this?" I imagine that both of these items that are in this year's report are going to be addressed going forward. It won't be repeat issues. Then people say, "Well, what did you have in your audit files that you didn't put in writing?" So that's this section of verbal comments. Bank reconciliations are being done. For the year we audited, they were not done timely. They were done retroactively. But a lot of work was put into them, and we talked about that earlier. And now they are timely. I think, and I know in the audits before that, I know they were not done timely. So even though this year was not done timely, they were more timely than they were the year before. But we talked about controls earlier. One of those controls is someone else should be looking at those bank recs. How do you and we know? Well, there should be some sort of evidence. If someone, either they're emailed around or the good old way of just when someone gets it to review it, they just put their initials on it. That way we know that that control has been applied to the process. The second one, fixed asset listing, that's your capitalizable, depreciable asset inventory. It's also an asset control. Has historically not been updated until basically the end of the audit. We're trying to finish the audit and we're waiting on an updated fixed asset listing. That's also an area that Bill put some focus on, and I think he still is focusing on it in the current year. So we really need you need to improve your maintenance of that listing of assets, the additions and just the deletions. And then the third one, which
Sorry, Chris. Sorry to
Yeah.
cut you off. Just before we go off on that, we've had this discussion before too. So what might you recommend as a best practice to keep those current? Because they were not current for a long time. We played catch up. And if we were depreciating them, they'd be current, but we're not. So they tend to, it tends to not be maybe as mission critical as some other things.
If I could take a shot, Chris, I think you're exactly right. In this world, which is, as we've talked about before, kind of unlike my history. The fixed asset listing is not used as part of the normal monthly financial reporting process. So that process happens directly in support of the audit. Now, this isn't an excuse, but because of that, it tends, when you're prioritizing things, unfortunately, and this is on me for this year, because this got to King and King later on in the process. Because it would, even in terms of audit priorities, it's relatively low, and I would dare to say, Chris, relatively low risk. So that's one of the reasons why it slipped. I mean, ideally, you could build it into your monthly process and get things capitalized and update the spreadsheet. Realistically, I think what needs to happen is an earlier focus on it towards the end of the year, but if absent getting it built into the monthly process. An earlier focus, and we've already started down that road, even with, if you look at the timing of planning this year, these guys are gonna be out here in just a couple of weeks to do interim, whereas, last year, because of some reasons on our side and some staffing reasons on their side, interim had to slip to November. So we're already trying to make some changes for this year so that we're not sitting here in June of next year talking about the financial statement. And this is very late to be having, this conversation, even though we were ready to do it last month. Even last month was very late.
Thank you, Bill.
Yeah, I mean, we hear this a lot on the fixed assets, and I know you're not using it to making your financial decisions. However, unfortunately, we measure you against GAAP and GASB, and GAAP and GASB requires it, therefore it's a required element. But I mean, I understand if you do it at year end, you're approaching year end, and you just send the lists out to your department heads and say, hey, Public Works, can you go down this list? What did we junk? What did we trash? Once a year is fine for us. But past probably all 3 years, it's the last thing we've been waiting on, trying to finish the audit, and we're still waiting on the fixed asset listing. So it stretches out and delays the audit.
Yeah, so if it's done at year end, like June instead of December, that's a different story. If we're talking about doing it once, best practice, if you guys reviewed it quarterly, and then like he said, at the year end, you send out that list to the departments, that's kind of like best practice, but that's usually still not realistic. It's hard to prioritize a quarterly checkup, but yeah, if it's done like June, July, August, around those times, that makes sense and is pretty adequate. But usually it's happening in December when we're trying to wrap up the audit, when that's difficult for us to even, we have to have it ready when we need to look at it instead of asking for it when we're trying to put the audit together.
If it's done in August, you'll get a gold star.
Yeah.
And then our last item,
But there's,
which I
sorry, on this one, Chris, there's doing it to have it and to hand it to the audit, right? And then there's governance around the accuracy of it, right? And is it being internally, are we auditing it?
Because there's a
There's
fair
millions
amount
of
of work
dollars.
that goes into it. I mean, Joe and Kelly at the town garage specifically, and Bill Birch up at the school are really the big ones, because they have the higher dollar assets, and they also have the ones that could be junked, as Chris mentioned. So, and it's really like I wouldn't go as far to characterize it as a fixed asset inventory, but it's maybe a light version of a fixed asset inventory.
I agree. Thank you.
the last thing on this page, we already talked about it, but I think it's important. You're kind of at the minimal staffing. I think you are not overstaffed in finance. And so your current structure in the past year or two, you've been utilizing a consultant, and that's fine. If that consultant position is eliminated, I imagine you probably need to replace that with a body. It may not be as highly technically skilled as the consultant currently is. But I think if you don't replace him with someone else, number one, you lose a little bit of the controls, but number two, you might lose a little bit of your capacity. And I think you're kind of at minimum capacity right now. And I guess that's it. Yeah.
Rob, can I do a follow-up on something that was said?
Yes, please.
Brady Warren, tax collector for the town of Thompson. Chris and Marshall, I was pleased to see your comment and hear about your comment with the tax receivable number at June 30th, 2022, almost a year ago. And I was pleased that you indicated that we're within the acceptable range. However, I know that you guys know that, and I think people around the table know that, but it's worth repeating that of that $880,000 receivable at the end of the year, more than half of that is one individual taxpayer that encompasses three different properties, 929, Riverside, 9:15 Riverside, and 6:30 Riverside. And our hands in the tax office, and I think they're the hands of just about everyone around this table here, are tied about being able to collect on that money. So, if you look at the numbers and you exclude what is not collectible for us, we drop down into the low 2% range of uncollectibles. And I think I heard you say that 3.5 to 8 was the average. So I just want to point out that while we're in the average, we would be significantly lower. And I know you guys know that, but I'm pointing it out for anyone who might be listening here and not as knowledgeable about it as people in this room are. So, and that's a year ago. So, in 2 weeks, we've got another year. So we got about another $70,000 or $80,000 from that individual with those 3 companies that are on the books as of 6, in addition to what was on the books at 6/30, 22, we're gonna be on the, on the books at 6/30, 23 as well. So I just want to point that out, that from where I sit, it's been extremely frustrating for many, many years. And you indicated that some of those receivables go back a long way, and they do. That's how long we, as a community, have been sort of, buoyed down into not being able to move on that property, and with all of the things that are going on. So I just want to point that out, just to point it out again to everyone in the room, that I'm proud of the work that we do in the tax office. We would again be significantly lower than the accepted group if it wasn't for one taxpayer that is totally out of our control. So thank you for pointing that out, Marshall and Chris.
Could I speak?
Yes, please.
Okay, Amy St. Ange. Just wanted to speak again. I wanted to speak on the resources for the finance department. When we combined into one finance director, in truth, what we were looking for was someone that was competent, more than competent. And what we got from Bill Steglitz, he's an amazing finance director. He's doing the work of 2 people, but he's doing it efficiently and he's doing it very well. And it's always been the intention to replace with some type of assistant finance director, so to speak, even though right now we have a consultant. That consultant does the work very well because he's so experienced, and we know that. But I also want to touch upon, and this is for the public's information, that throughout the town, we are sorely understaffed in every single department, and soon the school, because of the major budget cuts, are going to face more slashing and more loss of jobs. So that's going to leave them even more understaffed. Our public works department, it's a sad fact, but this is the fact of when you live in a community that does not have any type of tax base besides the homeowners and the vehicle owners. The personal residents are footing the bill for everything. But I do want to say it is the intention, when we no longer have the consultant, that we will replace with some type of position, but I do fear that it still won't be enough. But thankfully we have Bill, who takes on the role of about 3 or 4 people. So thank you, Bill, for everything that you do. And thank you to the auditors for the work that you do. We appreciate it, and looking forward to seeing you here at the end of June.
I do have if I might,
Yes,
probably the stupidest question you're going to hear, but it's because in our town, this has come up as a accusation that the school does not get audited. Could you comment on that, please?
Yeah, that's not true. No. No. It's funny because I had a lawyer call me a couple weeks ago and tell me that we should not be auditing the school. And what right do we have? I said, no, that's what we do.
It's not the stupidest question, but close to it.
They obviously they have a large amount of expenditures, a large proportion of the budget. So we work on we test their accounts payable, we test the payroll. They also have the cafeteria funds, which used to be students had to pay for a long time. They haven't had to, but so that's grant funding. They have a lot of grants, so that comes up in the state and the federal grant compliance audits. They have student activity funds, for field trips and money collected from school groups that we look at. And then we do this EFS work, for the State Department of Education, which is verifying that the data that they upload into the state system agrees to what's in their internal books. So, they get audited. For sure. And I just wanted,
I think I know the answer.
I just wanted to go back, well, as a matter of fact, especially if you have a high school, one of the highest areas of risk is the student activity funds. At least historically, they collected a lot of cash.
He froze. Is everybody froze?
Yeah, looks like everybody
It
is.
looks like it's me. Hold on,
No.
everybody's frozen. Hold on. Can you text them?
Yeah, I mean, there's-
Pause. There we go.
Are you still there?
Yeah, yes, I-
Okay. Just as probably appropriate, it doesn't have to be another bill, but probably someone with some experience to take some of the duties over would be helpful.
Okay, thank you. Any other questions? Any group?
Chris and Marshall, it's Bill. I'd like to thank you for your professionalism and your patience through this audit. Obviously, you guys know I was getting up to speed while we were going through the first one. I appreciate the effort and the instruction from your end, and looking forward to seeing you in a couple of weeks.
And I had one more comment, remember now. We talk about the audit being behind schedule, and you have been filed for a couple months. As of today, there are 28 towns in Connecticut that still have not filed with OPM.
Wow.
So you may feel late, but you're not even close to being the last.
That's disturbing, actually.
Yeah, it is. Yeah.
And it's gotten better now the last 2 years. And
Yeah.
what you teed up, Bill, was that it looks like we're gonna be in even better shape next year. And
Yeah.
one month was on us in terms of the budget cycle, so that was true. I too, and the group, we thank you for everything you did for the town and for the audit and the review tonight of the audit. Thank you very much.
All right, thank you.
Thank you.
You can drop off.
Yep. Thanks, guys.
What up?
Good night.
Would we, and this may require a vote, but would we like to, in the spirit of our tax collectors, personal time, he doesn't normally attend the whole meeting. Would we like to jump to item 10?
I make a motion, we jump to item 10A.
I second that.
Okay, all in favor?
Aye.
Opposed? Okay, we'll move to item 10.
Well, thank you. You didn't need to do that. I'm here for entertainment.
Well,
Yeah.
in fairness, you know, this looks like I thought it in my head. Thank you, Donnie.
So thank you, thank you. I'm here as mandated by the state of Connecticut, as all tax collectors in the 169 towns in the state of Connecticut, once a year, have to go to their finance authority. In this town, it's the Board of Finance. You've seen me here at your last meeting every year in June. And the purpose of the visit has to be that the tax collector has to present to the Board of Finance a suspense list for the year that is ending, in a couple of weeks, June 30th, 2023. What this is, and you've got, I think you all have a copy, right? Yeah, good. This is exactly the way it's, I presented to you for the last 19 years, I guess now. It's just that the numbers change and some of the names change, but essentially, I'm asking the Board of Finance to suspend an amount of $239,422.71 all that means is those are the collectibles for this year on personal property, unpaid taxes and motor vehicle and supplemental motor vehicle unpaid taxes. It's essentially just an accounting entry, doesn't change anything. It doesn't change the collectability of those taxes. We still pursue them exactly the way we pursue them all year long. So I indicate to you here that this amount is a little bit higher than it was last year. And the major purpose for this, spoke about this at the management team yesterday, and we've been talking to Bill about this for a while. The major reason for the increase is that the state of Connecticut, the General Assembly, in their infinite wisdom during the year, unintended consequences, I guess, but they went from a registration period for people who own vehicles from 2 years, and they extended it to a 3rd year. So that one of the biggest collection tools that we have in the tax office in the state of Connecticut is people cannot re-register their vehicle at DMV if they owe motor vehicle taxes. So, we have essentially 75% of the people who come in every year and pay on time. And then you've got about 20% of the 5% that are never going to pay, but about 20% that are going to pay only when they have to re-register. And that's used to be every 2 years. So now this year, it's the 1st year. So those people have been extended a 3rd year. We did Lynn in my office, who handles most of the motor vehicle activity. I had to do a study, and she identified that about $45,000 of tax, that motor vehicle tax that would have been collected by now in this fiscal year will only be collected next year, because those taxpayers have another year before they have to register. So it's good if you're a legislator, you're trying to get votes to get reelected, that you've extended the registration period from 2 to 3 years. But tax collectors across the state have been complaining about this all year long, because we're all in the same situation. So that just explains why we've gone up a little bit from last year. I guarantee you that money will be collected next year. The other thing that I want to point out to you is that in that last paragraph, I indicate that we've recovered about $88,000 this year on accounts that have been you suspended in previous years, the last 2 or 3 years. So we go on collecting. So it's just sort of a pass through. But by law, by state statute, I have to come to you and ask that $239,000 be moved from the active account to the suspense account. Still on the books, but it's in business, it's called a write-off. And here in government, it's called suspending those accounts. So I ask your permission to do that up to 239. I did this a couple days ago to have it ready. It's down to 237 and change as of this afternoon. I'm not going to actually do the entry until the last workday of June. So I suspect that number might be closer $200,000 by the end of by the time I actually do that entry. So, any questions about that? So the listing, I've got the first 2 pages, the personal property accounts that I'm asking to be suspended. The next 7 or 8 pages are the regular motor vehicle taxes, and the last 3 or 4 pages are the supplemental motor vehicle taxes. And it's like it is every year. It lists the name of the individual, the amount of the tax that's due, the amount of the interest that has accrued on that tax, and the grand total. So, be happy to answer any questions.
You need a motion for that?
I had a, yeah,
I'm sorry.
we will need to, I had a comment and a question. The comment would be, now that this is the first 3rd year, see that bump, we could reasonably expect that 240 level will be the new norm, or the new high water mark. 'Cause
Yeah.
now your 3 years are going to roll forward from here.
Yeah, it sort of rolls forward. Now, from year to year, Most motor vehicle, tax bills stay about the same, but supplemental motor vehicle, that's the partial year, people who change their vehicles during the year, that changes significantly. And one of the reasons, and I'm gonna not talk about this tonight, but I'm in the process of putting a little report together for Bill and the Selectmen and the Board of Finances, where we are this year, where we've come up a little short, and that is gonna show you that about $55,000 less to collect this year on supplemental motor vehicle tax bills than we had last year, so we over budgeted this year, and that's why we're coming up short in that area. But that's completely different than what we're talking about here. Okay. But yes, that could be the new norm. Now, the other thing to keep in consideration, Bill is very well aware of that, we have a reserve for uncollected taxes of 210,000. It's been that same amount for at least 10 years. Way underfunded. That's 1% of the $20 million taxes that need to be collected next year. You heard the auditor a little while ago say that, most towns 3.5% to 8%. I don't advocate that, but I think 2.5% to 3% would be a fair number. We've never moved that $210,000 in the last 10 years because it's a budget expense. So if you're gonna go from 210 to 310, it's another $100,000 in expenses in the current year budget. So it's always the last thing to get eliminated during budget time. It's something to think about in the future. You barely have enough to spend based on the $210,000 that's in the budget for this year. So 3-4 things going on here, but the state regulations, what I need tonight is a motion and a vote to suspend up to $239,000.
Okay, any other questions from the group?
I'll make that motion.
Motion to.
Suspend an amount not to exceed $239,000.
Okay, do we have a second?
Second.
Steve made the motion, Dave seconded the motion. To suspend up to an amount of $239,422.71. Any discussion about those motions? No discussion. Okay. We'll go around the room on this one.
Yes.
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 Dave, yes.
Yes.
Steve, yes. And I vote yes. That passes 4-0.
Thank you very much.
Thank you. Okay, moving back to our normal schedule. Item 3, approval of minutes from May 18th, 2023 special meeting. We get our motion to approve the minutes from May.
So moved.
Dave made the motion. Is there a second?
Second.
Larry seconded the motion. Any discussion?
Yeah, there's one small correction I think we need to make. Under fire department paragraph, it says the board, as is currently written, it says the board of selectmen agreed they intend that all of the fire departments be treated equally. I don't believe the board of selectmen said that, so that's an error. As we discussed.
Correct. Well, when we passed this is Amy St. Ange, when we passed the budget through to the Board of Finance, they were not equal. So we had not made that decision. We funded them based on what they asked for and passed it on to you to make your decision.
So it would be correct if that statement was struck.
Yes.
Okay,
Unless it was the board of finance that they all be funded equally, which is I think what we agreed. I don't know whether the intent is, if it's board of selectmen, then it should be struck. If you want to change it to board of finance, it's probably correct.
I would probably strike it, given that there's 2 people not here, and I don't want to speak for the whole group, but
I would probably say Board of Finance. We ultimately made that decision.
we did it in the vote,
I'm talking about the statement.
right? And I'm saying in support of
The
that,
bo-
when we voted, that's exactly how we voted.
Yeah. So the
I
Board
guess
of
it-
Finance agreed that they intended all fire departments being treated
Okay.
equally. I would move that the minutes be changed to reflect that it is not the Board of Selectmen, it is the Board of Finance.
Steve, are you okay with that?
Yeah,
motion?
that's
And
acceptable.
it would just leave it. We changed one letter in it.
Yeah, either way.
Make it easy for Donnie.
Okay. Any other comments, concerns, questions, edits? Okay, all in favor of accepting the minutes with the modification of Board of Selectmen to Board of Finance in section regarding the funding of the fire departments? Say aye.
Aye.
Aye, opposed? Okay. Correspondence. We all have, there's 3 items here. On 531. Superintendent of Schools, Melinda Smith, with a budget reduction letter to families. I saw that. Did everyone
Mhm.
have an opportunity to read that? Second was Cassandra Johns. There was an original email and then some follow-up email.
Yeah.
Conversation
I think that was Dottie was involved in that. Yeah.
originally, yep, and I think Steve was involved.
Yeah.
Tax collectors 11-month report. That came
Yeah,
by email. Yeah. Item 5, citizen comments. Are there any comments from citizens? We'll start in the room first. Any citizen comments? No citizen comments. Any citizen comments on the Zoom? How many people are on Zoom?
Just Linda.
Linda, any comments from Linda? Okay. If we're far less popular in June than in prior months.
Okay with that.
Notice I didn't have to do the 3-minute rule. Okay, moving on. Item 6. Selectmen's update for Selectman Amy St. Ange.
Thank you. I guess it's been a while. I forgot how to do these reports. It's been a while since I've had
Sorry
to
to
speak.
catch off guard there.
No, I've been planning it in my mind all day. So first off, as far as planning and development within the town of Thompson, Tira is currently working on a community investment fund grant that will be valued at around $3.8 million should it be granted to the town. It's a no match fund grant. It's all going to be connected around the development within this corridor, specifically the Main Street complete reclamation of the road and the reconstruction of the sidewalks. That's encompasses $3.3 million of the entire grant. That's being the ask. Additionally, we're looking at doing improvements in Swanson Park, Oscar Swanson Park. We have been working directly with the VFW and the American Legion to have their input on a more commemorative park where there can be reflection, something more suitable. Currently, a lot of the monuments just face the road. There's no chance for most pedestrians to just stand and look. And when we have events there, what we're hoping to have is a really nice event space for things like Memorial Day and Veterans Day, and just really brightening and improving the park as a whole. So that's what's going on with development. That grant is being submitted has to be submitted by June 30th. We hope to have an answer by September. Additionally, some fun things going on. We're going to be starting concerts in Riverside Park. The first one,
Saturday,
Pulaski Brass Band is going to be there on June 24th. That's always a favorite. There will be Golumkis and pierogies for sale by a reputable caterer, and the proceeds are going to go. The proceeds are going to go to the Teague Food Pantry or the food market. So any proceeds from that event are going to go directly to Teague. Keep it in house. It's a good fundraiser. So if you like pierogies and Golumkis,
they were excellent last year.
yes, so come out and get yours and watch a great brass band. It's always excellent. On another note, construction season is fully underway with the Public Works Department, and I want to dispel some myths that are circling through social media about the chip sealing. Several of the roads that were recently done are now undergoing routine maintenance, i.e. chip sealing. Crack sealing took place before the winter set in to prevent any type of icing that would expand and cause cracks in the new pavement. And currently the chip sealing is being done as a preventative and it's just extra adherence to keep that road solid for years to come. This was on the advice of the engineering firm that is currently evaluating all our roads. I'm happy to report that they have completed the evaluation of all the roads. And these roads that we're currently chip sealing were slated for such maintenance as is occurring right now. So there's a lot of questions going on, people questioning, why are we doing that when we just did the roads? Well, we want to make sure that we preserve the roads for many years to come rather than just a few years. The roads currently that are slated to begin for a full depth reclamation, the projects will begin on July 5th. Those roads with the report that came back from Beta Corp, and that's the engineering firm that did the full evaluation of all of our roads. All of those roads were in critical condition and in need of full depth reclamation, and that will include Park Street, Plum Road, Old Route 12, Fabian Road, and then I believe Norman Hill Road was on there as well. But those are all going to be full depth reclamation beginning on July 5th. So we'll be putting notifications out for the public, so they'll be aware of some, some delays if they're traveling on those roads. Obviously, Plum Road and Park Street aren't traveled too much, but just know that there'll be construction work in those areas. And I think that's all I have for tonight.
Good. Thank you. Any questions for Amy? No questions for Amy. Thank you, Amy. Next up, item 7, school district updates. Superintendent of schools.
It's been a while as well. So on Friday, June 9th, the Board of Ed held the Turtle Up Memorial High School commencement ceremony. 48 students successfully completed the graduation requirements set by the state and met the expectations of Thompson's Portrait of a Graduate. Earlier that same week, it was a busy week. Thompson Middle School held a moving up ceremony for students leaving 8th grade. For high school, all but 22 students will be moving on to Turtle Up Memorial High School. On that Monday, scholarship and awards night was held for underclassmen and seniors. The local community contributed $36,000 in scholarship awards to many of our seniors, and we are so grateful for those scholarships. As superintendent of schools, I really want to thank the Thompson community for the increase in the FY24 budget. And I also want to thank the members of the Board of Finance for supporting this increase. As you well know, unfortunately, this increase isn't going to balance the expenditures for next school year. So next week, on Thursday, the members of the Board of Education will be needing to review my recommendations for reductions. I think you have a copy of that in my letter. And then they have the hard decision of making what is going to be reduced to balance the budget. If they accept my recommendations, this will result in up to 17 positions being lost, in addition to other important resources. So I just want everybody to know that will have a negative impact on our students and families, but we'll do the best we can to balance that budget. Enrollment, we end the school year with 898 students. This is 1 student less than our opening in August of last year, which was 897 students. And we ebb and flow with enrollment and withdrawals, but we basically end steady at the end of the year every year. 23 students currently in special education out of district placement. The Bradley program, which is the program we have on site, has an enrollment of 25 students now, 13 of our own Thompson residents, and 12 from the following districts. We are pulling students in from Putnam, Killingly, Brooklyn, Plainfield, Sterling, Stafford, Woodstock, Foster, Gloucester, and Situate. And when we pull those students in from those other districts, we get a discount on our Bradley tuition. So that's, kudos to us. The program has a license for 40 students, and we hope to see that expand. It's beneficial to our tuition rates to send students to Bradley program when we have more kids coming from other districts. So it's to our benefit. FY23 is at the end of May. We have expended 99.6% of the budget that was presented to BOE on Monday for a total of $19,701,078. Obviously, we don't know until the end of the summer when you do the EFS reporting as to where we end as far as in the black. Right now, we're currently in the black, but we're skimming by. We have other invoices that will be coming in. I anticipate, oh, in addition, we found out that the water heater at the middle school is severely leaking and has to be replaced, so that's an expenditure that we just found out, so that might impact that bottom line. I'd like to end on a positive note. Save the date, October the 10th, and we'll be sending out reminders for a ribbon cutting ceremony for the new culinary arts program launching next year. As a reminder, the commercial kitchen was put in with fully funded by grants. And we have hired a dynamic chef and instructor to launch that program. We cut another position to balance that position out. Turtle Rock Memorial High School and Day Kimball have developed a partnership in collaboration with QVCC to develop a medical career pathway. In September, August, students will start to earn CNA certifications and they can get jobs out in the field. And we're also in the process just today of talking to Electric Boat about taking our current welding class and developing that into a program and then be a pipeline for employment for our students right out of high school. And the starting pay, if they come right out of high school, is $23 an hour with a full benefit package. So we're pretty excited about that. So they're helping us out with all of that. So that's my report.
Perfect. Thank you, Melinda. Any questions for?
If I may,
Yes.
so 99.6% is the projected for the whole year?
Yes,
Oh, okay, all right, thank you.
that includes income.
Gotcha, thank you. I was afraid it was just already reached that through May and had another month to go, so. Thank you.
Linda, excuse me,
Go ahead.
do you have the Thompson Middle School full amount of the 8th grade? You mentioned that 22 students were not going to Turtle.
Correct. So we
How many?
77 students.
Thank you.
So 55 are staying with us.
Thank you very much.
And that is, we usually lose about, well, the last couple of years, we've been keeping more of our 8th graders. The number when I first started was 26 or 27 that left the district. Some of our students are staying because they can take high school courses up at Turtle Rock as an 8th grader, and then get a leg up on classes that they can take there. So that's been working out well.
Good, thank you.
Yes.
Could we go back to the road
Oh, sure.
now in the chipping?
Mhm.
I'm assuming that the stones are not gonna be
Nope.
taken out
They're
during
going to be
winter?
running the sweeper. I believe. I'm not an expert,
Oh,
but they clean up the road surface after a couple weeks.
after a couple of weeks?
Yeah.
Or will the winter and the plowing take those off, do we know?
I mean, I think it settles in. I mean, I know in Putnam does have, so I live near Azad Road, which turns into Sales Ave, I think. And I know they've chip sealed that and it doesn't adhere. It seems to adhere pretty well.
Here's, well, Eastford has done it. They did it a year ago in front of our church, which is no longer there,
Mm,
but it held up well.
mm.
I think the important thing is the road itself. If you put that chip sealing on a normal road, yes, it will get pushed away by plows because of the unevenness of the road. But with the roads that have been reconditioned, it should not be a major problem.
Because the road that I'm on, that was done
Mhm.
2 years ago.
Great.
Right, 3 years ago?
It was before my time. It was before I took over, so almost 4 years ago.
Yeah, that's right.
Yeah.
Yeah, that's, I mean, it is smooth, but
Yep.
I was just wondering, where's the should I put a bag on my front of my house so we pick up the stones? I'm just kidding. You look like
I need
I was
some
real, huh? Maybe I will be real. I don't know.
I need some stone for my driveway.
I can't. I'll even give the town some of it.
But Rob, if I can just add one other thing, not
Sure.
about roads, but
Yeah.
something I forgot to mention. I want to send out a big shout out to Joe and Lars, who have been working together Joe being our Public Works Director, Lars is the crew leader, but they're also looking not at the big road projects, but they're looking at the smaller things. Memorial Day, we had a service. They had painted all the flagpoles.
Yeah.
And replaced the ropes. And it was respectful, and it stood out to me because that was my 4th Memorial Day service, and it stood out, it looked sharp. Additionally, on Park Street, where that little parklet is, when you come down from Route 200, there's this beautiful Gothic fence that was in complete disrepair. They welded it, they fixed up some of the sections and they painted it all black. It just looks sharp. It looks fantastic. And those little details, so they're not only looking at big projects, but they're also looking at those little minute details that most people in that position might overlook. So I have to give a lot of credit to Joe for his foresight in thinking about the small stuff too. He's really trying hard to improve the looks of the town overall, and I give him a lot of credit.
Okay, thank you.
Can I have one more question, please?
Absolutely.
The road
Mhm.
where it comes to a T, right? You
Lane
go
road.
either,
Blame.
no, what is it? You can go to
Fabian's.
Fabian or that, right?
Or,
I know
Ravenel.
that that's a
Right.
bad, that was a bad road and that was supposed to be some of it done this year. Would that? is that
Fabian's
still
completely getting done. Yeah, they've been working on the
all the way
drainage.
from there, all the way up?
Yep, July 5th, they'll be starting at Old Route 12 and then working their way towards Fabian. So
Oh,
we thought they were gonna start on Fabian, but that'll probably be
I know
the
it came up last year and they
Yep.
were gonna do it, but I haven't heard anymore, so I just asked.
for Fabian Road.
Mhm.
All of Fabian Road is getting completely reclaimed and paved,
Okay.
full depth reclamation.
Okay. Anything else? Okay, next up, item 8, financial report, Finance Director Bill Stedwards.
Great, property taxes were at 18.9 million collected, 96% of budget. Current taxes at 18.3 million, 98% of budget, and per discussions with Rini, expect to finish at about 99.1% or so. No state and federal grants received in May. We, as we mentioned in past meetings, we're actually at 101% of budget there, which is obviously nice to see. Local revenues are strong, just over $1 million collected, 97% of the budget. Investment earnings continue to be up at $157,000. Just to keep that in perspective, I think our budget there is something like $10,000 or $15,000, if I remember right. So that's just a terrific result. Miscellaneous income we've talked about in past meetings, 34,000, 35,000. That's really driven by the national opioid settlement. On the expense side, we are at 7.7 million, which is approximately $1 million below the full year revised budget. Obviously, there's a lot of things that close out towards the end of the year, but we tend to run it, maybe a $400,000 or $500,000 burn on a big month. So I'm hopeful that we will have some good results on the town side. I'm not ready to promise that yet, but I really think the biggest thing there is probably that we had budgeted appropriately for ambulance this year, where last year we hadn't, and that drove the miss. All the bullets under expenses we've talked about in past meetings. A lot of the help comes from our mild winter. I've got some accounting cleanup to do with the cemetery grant. Town council, I'm hopeful that although we encumbered for some money there, hopefully some of it will come back. We'll see. Balance sheet side, cash is down 1.4 million since last month, but we're higher than we were last year by 764,000. Fund balance at 5.2 million, up 3.3 from June of 2022. Our little sheet where we kind of project fund balance, our numbers are a little bit different than the auditors, but at 6.7%, we're still well below that benchmark. Hopefully we can head in the right direction with a little luck with the budget. Other items that we actually talked about this already, but the financial statement audit is getting teed up. I was very pleased that we got interim move to June, back to our historical timeline. They've already sent the schedule request over and at this point, I would say we've probably gotten them about 85% of the items they requested for their end of June testing. Having been a public accountant for a number of years myself, getting that stuff back from your client early enough to make your selections and have things pulled when you actually come out really helps drive success on that. So that's what we're working towards. Another item that I haven't had a chance to talk to you guys in the past, but it's kind of been simmering for a little while. This comes from our friends on the building committee. They're currently overseeing 9 projects. 3 of those are oil spill or oil tank replacement related. They have reached the point on those 3 projects where they've cleared all the hurdles and they feel like they can return the appropriations that haven't been spent. So that actually totals $70,604. So they voted in their meeting on Tuesday evening to return those appropriations back to the general fund. So that's terrific to see because frankly, we need every little bit of help we can there. That leaves, the projects they're monitoring now actively: salt shed and EMS, the school security related project, school roof, which is getting very close to being closed out. There's one last invoice they have to pay around some cleanup, landscaping work. And obviously the school track. Those are the biggies now. But it'll be nice to get those oil spill and underground oil tank projects closed out and the funds returned to the general fund.
When is the expected time start on the track? Is that going to be next spring
They
or
are
this fall?
going to bid this fall, right?
Yeah,
The real trouble was the timing of the bid and the contractor's work being pulled. So they're hoping to go to bid in the fall and work on it in the spring.
Okay, is there any movement on the security part of that?
No.
Appropriation.
The grant has been, if you're, Bill has completed the grant, it's submitted, and we haven't heard anything back.
Okay,
Demas, that was sent to Demas. Was that the grant? Oh. for
this is the
security?
$500,000.
Yeah,
Yeah, $500,000.
Homeland Security.
Homeland Security.
No word back yet, and no additional word on the HVAC grant either. Bill keeps beating the bushes.
Well,
because-
the HVAC grant opens up in August, and we'll resubmit. We did have, an overview from the state, so we know, what to upload in there. And make sure we have all the documents in the right place. It's just waiting for that window to open, but once we submit in August, they don't work on it until December. And so it's gonna sit there for a while.
We won't know till the spring, next spring. basically.
Next January, we'll know whether
That's
we've
it.
gotten it or not.
That's it.
Thank you, Bill. Any questions for Bill?
I wouldn't say that there was a beer near my house today. You know, it's either that or my brother looking like that. You know, because he walks the same damn way. I didn't want to get close.
No,
No, this is true though. but
I
it was
I
down
won't ask
where the
which brother.
Kids are playing ball tonight.
Yeah.
Yeah,
All right.
so.
Super. Thank you, Bill. It's a good update. Next up, Turtle Lot Fund update. Board of Trustees. We haven't met.
Yeah.
4 of us here.
Not a lot to report.
Not a lot to
No
report.
change.
Anyone else have anything to report?
There's no activity because
Right.
there's no money.
Right.
That's
No
because there's a
projects.
floor. in terms of
Right.
the
Right.
amount,
Hmm.
Correct.
Okay. We did item 10, item 11, old business. No old business. Item 12, budget workshop. If needed, no budget workshop. Item 13, Board of Finance member comments. Are there any Board of Finance member
I would
comments?
just make the comment and parallel Chris. That we seriously have to consider an assistant director for Bill. I think I mentioned that in the motion that we had approving the consolidation. I indicated that it really required additional people. And I think this year has proven that fact. And we have to keep that in mind. I know monies are there for a consultant, whether or not those will be sufficient to hire someone, I do not know, but it's something we have to seriously look at.
Anyone else? Okay. Motion to adjourn. Steve made the motion, second by Larry, all in favor?
Aye.
Opposed? It is 8:32. Meeting's adjourned. Thank you, everyone.
Huh? Can I have a right?